Now we'll study about the methods of measuring national income, how we can measure national income. Production of goods and services, sale of goods and services, and the income generated from it. And the expenditure incurred. Production of goods and services, which leads to income generation, and income generation leads to further expenditure on goods and services. All this is a continuous process. So, with the help of this, we can calculate national income. With the help of, we can either find out how much production has been done in a country, the volume of total output, or the income that has been generated in this process, what is the income that has been distributed or has gone to the various factors of production, or the expenditure that has been done by the three spending units in the economy, that is the households, government and the business firms. What are the total expenditure that has been done? By any of these methods, we can calculate the national income that is generated in a country in a given year. Now, the first method that we are going to take up is the value added method, or it is also known as production method. It is also known as production method. Now, let us first understand what we mean by the term value added method. Now, suppose we will take up the example of bread again. Wheat was bought at a price of say rupees 100. That wheat was bought by a flour mill owner at a price of rupees 100. Then he crushed it and made flour out of it, and then he sold it at a price of rupees 150 to the baker. So the baker bought the flour at the price of rupees 150. He manufactured bread out of it at a price of rupees 300. He sold it to the wholesaler. Wholesaler sold it at a price of 350 to the retailer. And the retailer finally sold the bread at a price of rupees 400. Now, if you will see, you will add the turnover as 100 rupees. The wheat was sold. Then for 150, the flour was sold. The bread was sold at a price of 300. Then the wholesaler again sold it for 350 and the retailer again sold it for 400. So the total output comes as rupees 1300. So in the manufacture of bread, if you look at it in this proposition, it comes at around 1300. But is this how we should calculate the income? This is the wrong method. We should calculate by taking the value that has been added. Suppose I buy a piece of wood for rupees 100 and I make a chair of it and sell it for rupees 400. What is the price? The price is 400. And what is the value that I have added to it? It is 300 rupees of value addition that has been done. So this is the price that should be considered. Similarly, when we are talking about wheat was bought for rupees 100, then a value addition of 50 rupees was done and converted into flour. Then that flour, on putting another 150 rupees, it was converted into bread. Wholesaler made 50 rupees out of it and the retailer made 50 rupees out of it. So the total money that was made was 400 rupees. So from 100 to 400 rupees, and this is the final price that the customer pays for it. So this is the value added, and this is what we should consider while we are taking into consideration the national income. While we are computing national income, the value added to a product should be taken into consideration. One, because it tells you the real value. And second, it helps you in avoiding double counting. If we are taking into consideration this method, we are counting the amount that we had spent for wheat so many times. This should not be the case. We should take only the value added. This is how you compute the income by value added method. Now, what are the things that we need to keep in mind? As we all know, there are various sectors in the economy which are broadly divided into three sectors. Our economy is broadly divided into three sectors: primary sector, secondary sector, and the tertiary sector. Primary sector does the land-based activities, secondary sector does the manufacturing work, and the tertiary is the service sector. Now, these sectors are further divided into subsectors. Sectors are further divided into subsectors, and then subsectors have individual units. How the computation is done? Firstly, the production of individual units is taken into consideration. It is then added up, all the individual units are added up in that subsector. Then all those subsectors are added to arrive at the total income or the total production of that particular sector. And when we add all the three sectors together, we arrive at the national income. So we classify them according to activity. If it is a land-based activity, it will form a part of primary sector. If they are doing manufacturing, they'll be a part of the secondary sector. If they are providing services, then they'll be a part of tertiary sector. Then you add up the value of all these sectors together. Now, there are certain things that are to be kept in mind while computing national income from value added method. You have to take into consideration the production of fixed assets if they are done by the firm itself. That is to be taken into consideration. It is not that these are the expenses that we had incurred, so we will not compute them. No, you have to take those things also into consideration. Then you have to keep into account the production that has been kept for self-consumption. This especially happens in the field of primary sector, where the farmer is producing and a part of the produce he keeps for his self-consumption. That also should be added. It is not that that should not be added. So production for self-consumption should be taken into mind. Then imputed rent of owner-occupied houses. Just in case if a producer of a firm is using his own house, the income that would have generated if he would have otherwise rented the house should also be kept in mind, or the output that he would have got, income that he would have got from that particular house. So imputed rent of owner occupied house should be also taken into consideration. Along with two other things that we need to keep in mind is sale of second-hand products cannot be taken into consideration because their production was done in some previous year and it has already been accounted for. So you cannot take into consideration sale of second-hand products. On the same hand, if there is any brokerage or commission that has accrued, on those sale of second-hand goods, then that would be included, because that is an income that is being generated in this present year. So sale of second-hand goods would not be included, but commission incurred on second-hand goods, commission incurred on sale of second-hand goods, they would be included. So 5 things that need to be kept in mind is own production of fixed assets should be considered, production for self-consumption if any, that should also be taken into consideration while computing national income from value-added method, and imputed rent of owner-occupied houses should be taken into consideration. Sale of second-hand goods should not be taken into consideration, but if there has been any brokerage or commission that has accrued because of it, that should be counted. So this was production method or value-added method. The next is the method of measuring national income is income method. By value added method, we had arrived at it by adding the values that were the output that was produced by various sectors. We add that together and arrive at national income. By income method, we arrive at national income by adding up the incomes earned by all factors of production, namely land, labor, capital, and entrepreneur. Land gets rent, labor gets wages or salary, capital gets interest, and entrepreneur gets profit. So rents, wages and salaries, interest and profits. And along with this, composite income also. What is composite income? It is also known as mixed income. Let us explain this with the help of an example. Suppose there is a man who has opened up a shop in his own house. He is working there. He has put in his own money. And he and his son are providing services. Now, how can he differentiate the income that he has earned? Will he differentiate that this will go as the rent, this will go as the salary to my son, this will come as my earning as profit? He cannot distinguish these incomes. So, these are grouped as composite income or mixed income. And in India specifically, or in any underdeveloped countries, these form a major part of income where you cannot differentiate the incomes as separately as individual incomes. They are combined incomes or mixed incomes. So these should also be taken into consideration while we are computing national income from income method. So by adding up the incomes by the various earned by the various factors of production and mixed income, we can arrive at national income from income method. The next is the expenditure method. As I told you, there are three spending units in an economy. One is the household. The other is the business firm which is producing. And the third is the government sector. These are three spending units. How do they spend their money? They spend their money either on consumer goods, they spend on goods and services, or they save. A part of money is either spent or it is saved, or in other words you can say it is invested on capital goods. So there are two types of expenditures. One is consumption expenditure and the other is investment expenditure. Who does this consumption expenditure? Consumption expenditure is done by either household who spends on buying goods and services, or it is done by government who buys goods and services. Investment expenditure is either done by business firms or it is done by government sector. The consumption done by household is called as personal consumption expenditure, and that is which is done by government is called as government consumption expenditure. And the investment done by business firm is known as personal investment expenditure, and by government sector is known as government expenditure. When you add these, you arrive at the total expenditure that is done in the economy. when in the net domestic expenditure we add net foreign expenditure, we arrive at the net national expenditure. All the three methods are important from the point of view of an economy. By using all the three methods, we come to know we get a 3D image of the economy. That where are the incomes, from where are the incomes coming, where the expenditure is going, and what are the production that has taken place in the economy. But ideally speaking, the answers or the estimates that we get from all the three should match. But ideally it is not so, because there are discrepancies in each of the method. Like when we use income method, there are many people who do not disclose their true income. So we cannot have the actual income estimate. Similarly, in production, there is a problem of value addition, double counting. So in order to avoid these things, we should have a proper calculation so that we get to know where we need to stress, where the government needs to stress on economic stability, and for economic growth. Now let us take up the question so that the topic becomes more clear to us. As per the value-added method of measuring national income, identify which of the following item is excluded. Now you remember, while we were talking about value-added method, there were 5 things on which we had stressed. First, we do not take into consideration sale of second-hand goods. Second, we do take into consideration the brokerage and commission that is accrued on the sale of second-hand goods. Third, imputed rent of owned house. Fourth, the production that is being kept for self-consumption. And fifth, fixed assets if they are created by own, that should also be taken into consideration. So, which of the following item is excluded in measuring national income while we are computing it by value-added method? Brokerage and commission earned by dealers of second-hand goods, they should be included. Sale of second-hand machines, should they be included? No. So, which item should be excluded? It is sale of second-hand machines. Production for self-consumption, it should be included. And imputed rent of owner-occupied house should also be included. So the answer should be B. Sale of second-hand machines should not be included. Value-added method is used to measure national income. Next, the production method of calculating national income is also known as value-added method. Value-added method is also known as production method.